pack. That shit crazy. This really a geek pack, bro. I'm not gonna lie. That's a cool little play. Nah, that's hard, bro. Hold on, yeah, I gotta. Chat got the CDs, man. You know what I'm saying? Oh, wait. I gotta post this. I keep forgetting I gotta post this. Baby, they will need a hug. That shit gonna be stuck in my head now. Bro, don't do this, man.
It would be crazy if you was actually like a crazy ass like trading person that people watched, and you had all them funny sounds on there. You
Hey, one
like
day
that should have been hilarious.
I
You'd be
was
like the
about
only entertainment trader to watch.
to say, bro, you never know, bro. Niggas really might hit that tier one day, bro. You know what I'm saying? You just never know. Hold on, I gotta restart my phone real quick. Yo, my phone been tweaking OD today, dude. Like, you know how when your storage get low, it start like that little spinning circle? Normally I can just like delete a few things, my joint be alright. But I guess Apple catching on, bro. Them niggas just like, nah. That joint still be buffering.
That Cash App.
Nah, for real. They said,
That
hey, we know you
Cash App.
got it. I said, yo, chill, gang. I know you got it. Why you fiending, bro? You know what I'm saying?
Apple need that shit.
Bro, you know what we should do? When you come to Charlotte, bro, I want to do a stream with you, and then you making like the sounds on there. You know what I'm saying? I feel like that would be fire.
We could do it, but I think we can't. I'm so down to do some shit like that, but on the way people record is like the same way like how you try to. It's like you got to download something. I tried to look it up on YouTube, and it was like, I don't know. It's like you got to download a software because I think FL is like a licensed thing. FL Studios, you can't screen record it. Like it won't let me screen record it. Yeah, like even on it won't let me do it on Discord. I don't think.
Yeah, I was just.
I tried to stream it one day, but it's like.
Wait, so like Platboy Max and all them other boys, they be having like.
They got Windows though.
I mean, yeah, I mean, so I got Windows too. So I was gonna say it should work on mine.
You gotta. It's like FL. It's a paid software. Like it's a legitimate. I can try to log into it, but you won't have all the plugins though. Like all the plugins I used.
Oh, like I'm gonna have to download it or something.
Yeah, it's like a legitimate thing. Like it's like you gotta log in. I use my friend's FL Studio account to even download it. After you download, you gotta log into the FL Studios. Then I have like a whole bunch of plugins that like I actually got from online. Like I bootlegged it though, but it's like somebody got on my computer and gave me the plugins because all this shit is like it's all like professional plugins. So it's like what actual real rappers use, and
Bro,
then from there,
I used to have that U-torn.
yeah,
bro.
it's a little bit.
I'm already knowing.
Yeah, that's how I got all of this stuff through YouTube.
Alright, bet. Yo, chat. Y'all got check out these new little sounds that we got for y'all boys, man. You know what I'm saying? Now let's pull them up.
They gotta hear it.
They got. Hey, what should we go first? I went to Billy.
Oh yeah.
Oh damn! I ain't know it would cut it off, bro.
Baby, does Abel need a hug?
Bro, I'm about to start spamming these.
That's a reversal. That's a reversal.
Yeah, that was tough.
Oh yeah, I need my cheese.
Yeah, but I ain't gonna lie, this was tough
My
too.
partners, they bad, they poking. I make money, that's my favorite slogan.
Bro, these are so tough, bro. I'm so happy y'all did these, bro.
Bodega, oh yeah, I need my cheese.
And that nigga cheese tough. I like the name of that one, bro. Yeah. Dang. So how you boost the server? I'm gonna have to figure out how to do that.
You got to get Nitro.
How you get Nitro? Oh, you know what? I think my computer came with Nitro. I gotta find that. Pamphlet that came with it. It said something about that. I kind of just I ain't really pay no mind to it, bro. Cause I didn't really know what it was talking about. I don't really use Discord like that. Bro, that's fire. That's fire. I feel that heavy. All right, let me pull up y'all stuffy stuff. Got a little homework in here. Yes, sir. Bet.
Stream with no ads.
You said what, bro?
This nigga Kaiser, he about to do a stream with no ads.
Damn, that's tough. Everybody get to watch.
Somebody
it
said
free.
he made $30 million at the streaming university.
I believe it, bro.
Yeah.
I believe it, bro.
30 million, crazy. I wonder how much he put up though.
I think he said he put up like probably like a couple mil because I know he spent like over 500 on just what do you call it? Just like the PCs and stuff. So
Yeah,
That's
he probably got
kinda
hella brand deals though too though. They was dead ass teaching the class, nigga. Agent.
yeah, Asian was cooking up, bro. Asian was cooking
He
up.
got everybody there a Samsung phone. Like that's kind of crazy.
Yeah, they was going crazy with it, man. And I heard that Samsung phone be going kind of crazy with the quality, so they weren't like
Yeah,
cheap
they
phones
got
either.
they got the best camera.
Yeah, that's what's up, bro. Hey, I was about to say, I know last time I was like, you know what I'm saying, find a price run, give me the premium and discount, and then annotate like how price unfolded and like the levels that it went to. So I think this would be a good time for us to kind of go over that because I want to make sure you guys have like a solid understanding of it. I think we're gonna treat today kind of more like a review day. I want to make sure that everybody's able to, you know what I'm saying, just make sure they don't have like no questions about like the basics, because I think from there we can start getting into like the nitty gritty. So I seen Benny been on it, bro. He got all of his in here. Okay. What's up?
No, I mean, Abel did a lot of it together, though, right?
That's what's up. So this is you and Abel's together?
Yeah, we pulled up yesterday on here. So we basically did. Abel, I don't know if you have any more, do you?
I sent the ones that I did before we got in the call.
Okay, bet. So we'll look at it. All right, bet. So this is your cell example. So, okay. I see this one's kind of cut off a little bit. You got like a full version?
Share your screen.
Oh, yeah, my fault. Hold on. Let me share this shit. I can see it.
I'm not glad. I think the very first one that we did, I sent a lot. I ain't gonna lie. I think the very first one, that one was weird. I remember that. Let's go to the Let me see where you are. Or would it be easier if I share my screen?
Nah, this is cool. We can break this down. Okay, so I'm gonna just start off like with this one. I see like what you were trying to say, but I think there's some ways that we can kind of make this a little bit better. So, for example, this swing point is buy side liquidity right here. Like technically, yes, that is considered a sweep, but I think it would be better if you start looking further to the left, because you can see we have these relative equal highs right here. And I want you to notice how if I were to draw a horizontal line right here, how price bumped above these two relatively equal highs, and then it started dropping. So I would put, yes, this is the swing point, but I would move your buy side liquidity over here, because this would have been the main target. You know what I'm saying? Because you want to keep in mind, when price is coming up, it's targeting something. But if price is already up here, that means it most likely had already hit its target. So you need to understand where price was looking to target, okay? So that would have been these two relative equal highs right here. Is there a way I can, yeah, they need to have a feature where I can just
edit.
Yeah, because I feel like that'd make it so much easier. Let's go back. Let's open this again. So as far as your premium and discount, you have the internal buy side liquidity and sell side liquidity. Those aren't bad. But I'm scrolling through. It would have been better if you had your premium and discount listed on this entire leg right here, okay? So one thing you want to keep in mind, anytime that you anchor your Fibonacci in order to measure these moves, you want to go from the top of the dealing range all the way down to the bottom. A dealing range is just the entire price leg move, okay? So right here, all you did was just highlight the expansion. It would have been easier and it would have been better to read if you went all the way from the top all the way down to the bottom. But it's cut off. Like your screenshot is cut off right here, so I can't even see like the rest of it. It's kind of pointed out exactly.
I'm pretty sure the next slide. Yeah, I think the next. I think the next picture is like the continuation. I'm pretty sure.
This one right here.
Or those two are aligned together. Yeah, never mind.
Wait, which one? Oh, these two. So this is back and half. Okay. Yo, we'll break it down. Okay, yeah, so like you did it right. See, like this one. This is how you're supposed to set up your dealing range. So you see how you're able to get your premium. I can't talk. Your premium and your discount, and then you had your sell side liquidity from back here. So I'm gonna trust that you had it anchored the right way. Your market shift. So your market shift is off. this purple box that you have highlighted, is this what you're trying to say is the market shift, or is it that blue line right here in the middle?
So no, I think
Like, what? Explain to me which one is the market shift.
the purple line is a fair value gap. The market shift would be the line. You see that far left down candle? Yeah, that blue line that you're basically hovering over.
Uh-huh.
That blue horizontal line, that's the market shift.
Okay, and then what made what made you place your market shift right here?
Basically where after the liquidity got broken, that was our previous low.
Oh,
To like
okay.
show where the market shift.
So you marked up. So this market shift was made on I see we're on the 5 minute right here. So I'm
Yeah.
assuming you got this from the 1 minute.
No, I'm not gonna lie, I did it off the 5 minute.
Okay. So this is why
I
I'm
still
glad.
did it.
So this is why I'm glad like we're reviewing it, because I want to make sure we can catch these things before we start putting live money into the market. So one thing I want to show you guys. You said the reason why you put it here is because this is where the most recent low was, or the most recent what was. I don't want to put words in your mouth.
Or it was recent low. So basically after the chart went down and then it hit that reversal point and started to go up, I just located like the most recent low. Actually, the market shift, yeah. It was where I thought the most recent low would be like the breaking point, like where I think the breaking point should be at, where I would consider it to be a market shift. So it
So-
was my recent low.
No, I get you. So one way to think about it, you want to make sure that if you're going from south to north, your market shift is going to be bullish. Okay, so you're using the low of this price run as the market shift, when in actuality it would be the most recent high, right? So think about it, you want to go opposite of where we came from. So if price is coming down and prices begins to go up, I need to find the most recent short-term high on this price leg that price is going to expand through, so that I know there's a market shift. So instead of it being right here, I wish I could annotate it. Maybe let me screenshot it. I might be able to do that.
And I guess where I like think it's supposed to be at.
Yeah, I'm about to show you. So instead of this right here being your market shift, what the blue line is, it would be right here.
Okay, yeah.
See what I'm saying?
Yeah.
That's so sloppy.
Yeah.
So I need you to understand
I know.
why. I need you to understand why though. Okay. So
Okay.
this black line right here. There we go. Ah, damn it. What the freak, bro? Okay, just ignore that. Oh my goodness. Okay, you get the point. Let me. Okay. Okay, so this area right here. Bruh. How do I go to just like selecting stuff? Okay, maybe I can just. Okay, this short-term high, right? So price went up, it retraced into this fair value gap, and then went down. When price did this, price created a short-term high, okay? And then it collapsed through the sell-side liquidity. Now, when price reversed, price expanded through the previous short-term high. Once price did that, that is your confirmation that is now a market shift, okay? So it wouldn't be down here. Now, you did mark up something here that is correct. I'm not going to go over it just yet, but this isn't all the way wrong, and I'll explain it another day when I start going over the fair value gaps. But this right here is what you're going to want to label as your market shift, okay? So that previous short term that's going against the direction that you're trying to go, right? So if this came down and I'm going up, I want to attack the most previous high. So think about this. Price has to attack in the direction that it's going. So you want to find the thing that's matching the flow. So if I'm going up, I got to find a high that it's looking to take out. Once the high gets taken out, then I understand that, or the short-term high in this case gets taken out. That's how you understand that it's now a market shift. Okay. So you got your external correct, premium discount, that's correct. Okay, cool. Bet. Let's go to the other one. So I did this one. Now let's go to this one. Okay, so we got your premium discount highlighted correctly. Okay. Your sell side liquidity is down here. Oh, it's basically a continuation of the same thing. I see what you're saying. Okay, so liquidity. Okay, yeah, your liquidity is correct. You know what I'm saying? I like that. So this internal low right here, what would this be? You have your market shift.
That would be, yeah, that's the
be?
market shift.
Exactly. Now tell me why this is the market shift.
Because that's our short term low. So that's the breaking point. That's where price is trying to chase in that direction. So I need to correlate that.
Look at it kind of like football, right? This is the defensive line. You get through the defensive line, you're getting at the quarterback. You know what I'm saying? Or I'm sorry, the offensive line. If you're getting through the offensive line, now you're getting to the quarterback. So if I'm the defense, I'm not looking to take out my own man. You know what I'm saying? We're trying to push towards the direction that we're trying to go. So look at the direction price is moving to go, and you're gonna find a short-term high or low in that same that's in its way. Look at it like that. Like if you were to draw this line straight out, this price bar would be in price's way. So it's looking to run right through it. Make sense?
Yeah.
Bet. So yeah, and this internal low is correct, but this would also be the market shift. So it's not entirely wrong. And yes, I get you're saying this is the reversal leg, which is correct. But I want you to make sure you're identifying it with the correct terms. So this right here would be what?
Expansion.
Correct. Yeah. So yeah, you're getting better, bro. You're getting better. Definitely getting better, bro. I'm gonna break this down. Well, let me go through Able, and I'm gonna go back to this. Okay, yeah. So you got some more. All right, let's see. Recent low. Okay. So in this scenario, this little section that I'm circling right now on my mouse, explain to me where the liquidity takes place.
The liquidity takes place down. I want to say. You know, I mean, like are you asking me? Do you want me to describe what's going on, or are you trying to say like, is the liquidity taken out like near the sell side liquidity where my smiley face is at?
Yeah, exactly. So basically, what I'm getting at, this short-term low gets liquidated right here, and then as price comes up, where would the market should be in this area?
If you put your mouse, if you scroll diagonally left up.
So tell me when to stop.
That high.
Tell me when to stop.
Stop around there, yeah. That green wick.
Exactly. So yeah, this right here would be your market shift. So yeah, now you're starting to see it. You're starting to understand it. And then yes, this point it would be the reversal. And yes, I want you to see how when price after it took out its low, notice how it started hunting back. So your TP exactly. So your TP1. I see what you're saying, this FVG, but you're right. This imbalance right here would need to get filled. So honestly, the beginning of this imbalance could have been your TP, or right above where the premium is. So either way, I get what you're saying, but I want you to like fully understand why these certain levels are being attracted to by price. So yeah, that's a good little dub. You know what I'm saying? Okay, so you got your high, you got your low, or your low to your high. Okay. Let's see.
This was explaining the what you were about to explain. You said the extra credit, so it's your remember that screenshot you put in with the phone? You're like, this is extra credit. I don't know if you want to skip this one. This was like the extra credit, unless you want to go along with this.
Yeah, because we can break it down and see like
okay.
Kind of see how our analysis is. Oh, I can't talk. We're just gonna look how our charts match up. So if you were to go down to the 1 minute, this right here would have been the market shift, because I remember, because that's what I used to use my trade. So you got your internal low, okay. So based on the range that you got highlighted, that is correct. For mine, I just used this price leg right here, because that's kind of what I was working with, and I'm gonna show y'all this. So yes, this right here would have been liquidity. So what would have this been right here?
That's
This blue line that you have marked up, what does that represent?
Is that equal highs?
Exactly. So this would have been the high that gets taken out.
okay. Yeah. That's the equal high. I'm trying to remember what I did. Yeah.
No, you good. But yeah, so I'm just showing you how everything's kind of coming together. Okay, bet. So let me go back. Well, let me do his first. Okay, liquidity gets sweep. So Abel, where is the market shift in here? You forgot to add that.
It's on there, but now I see that it's wrong.
Oh, I see what you're saying. I'm thinking, yeah. So this would be wrong. So where would you correct it? How would you correct this?
The red wick to the left of that candle.
So tell me when to stop.
Right there.
Right here.
Yeah.
So I see where you're getting at, but I'm gonna tell you why this would be wrong. So you want to look at a clear price run. This is just in that consolidation area before price actually went back down. So this is how you identify the market shift. Okay. Go to the very first candle that violates the previous liquidity pool. So that'll be this. So from the candle that breaks the liquidity, you want to immediately start going back left and finding the previous short-term high or short-term low. Okay. So in this case, because we liquidated buy-side liquidity, we need to be looking for a short-term low, right? Because that's the direction price is going to reverse towards. Okay. So if I start, so if you were to start looking back, where would your market shift be?
Go to the liquidity sweep and then go down.
Okay.
Right there.
Correct. Yeah, that's good. Hey, y'all can spam them emotes now or them soundboards. You know what I'm saying?
We having fun now. We
Yeah,
having fun
Baby,
now.
if it's able, need a hug.
Yeah, good does. But nah, that's correct. So I'm glad you guys are able to have these practices because I'm showing you guys how you're able to correct it. So yeah, this is where your market shift would be. It would be right here. Cool. But yeah, your liquidity sweep right here would have been correct. This right here would have just been the liquidity pool or the liquidity area that price got taken out, and then you see how it consolidated and then expanded after it took that out. So yeah, good luck, Doug. Good luck, Doug. Let's check the second one. Okay, so liquidity sweep, true. Again, market shift. So you want to look at the candle that violated the low in this scenario, and now we're gonna go back left and find the very first short-term high or short-term low. So Abel, if you were to correct this, where would you change your market shift to?
Go back to where I marked liquidity sweep.
And
then keep going up to the left. That one.
right here.
Yeah.
Exactly. So this right here would have been the market shift. So I want you to see the way price reacts once it does that, okay? Because price could have easily came up here and then continue back down. But once you get that market shift, that is confirmation that your liquidity sweep is of high probability. So yeah, good dog, man. You know what I'm saying? Hey, man, you feel me?
My pockets, they fat and they poking.
Yes,
I make money, that's my favorite slogan.
happy for my boys, man. You know what I'm saying?
Yeah.
I like that. All right, now let's go over the extra credit, right? So this is something that I caught the other day. So I want you guys to kind of see what I was seeing, okay? So right here, these relative equal highs. Can I blow this up? All right, right here, these relative equal highs, right? Boom, price sweeps it. Then we get our market shift, which is right here, right? So at this point, I understood that I don't want to see price come above this high. This high should be highly protected because this is what type of resistance? Is it high resistance or low resistance at this point?
I want to say at this point it's
Yeah. So
Wait.
once price came back down here, right? So we're already at past the market shift. This high becomes well defended, making it a what type of resistance? High or low?
the resistance.
You said what?
It's at high.
And re-explain to me why this would be a high resistance.
It's at high because that's the buy side liquidity point.
So I see why you would say that, but this right here,
Or
this right here is technically a high resistance liquidity run too. Like if price was all the way up here, like let's just say this leg never happened, right? Price is still up here. This right here is considered a high resistance liquidity run. So based off what I said the other day, why is this a high resistance liquidity pool? Why is this a high resistance liquidity pool after price had a market shift? I kind of just gave you the answer.
I want to say it's external.
So you're in the same ballpark. So the reason why this high right here would be highly defended is because liquidity was already swept right here, and then we got the market shift. Once we see this happen right here, this market shift after the liquidity, we do not want to see price return back to this high because this is now a well-defended high. So price had already did his job, and at this point, we want to see price come back down. So notice this fair value gap, that's right here in the, this is all the way from back here. I just didn't have it on the screenshot. But notice how price came back up in it, and it came right back down, right? But it did not exceed this high. So if you were to trade this, your SL would be right above this high right here. And that's how you would be able to trade something like this. And then I want you to kind of see my exit point. If I were to draw a fib from the low to the high, this TP right here, it's set in the discount of this PD of this price run right here. So you can see how price, I should have took a later screenshot when it got closer down here, but I want you to notice how price was moving its way towards this section before it ended up going right back up. So that's my whole point of making you guys have these practices. This is actually a real life example you can apply and you can actually see for yourself. Now there's multiple examples of that today. So I actually want you guys to share your screen.
I'll be back.
All right, bet. So I actually want you guys to share your screen and then give me examples of price doing what we just talked about, because I think this would be a good practice for you guys to be able to get these reps in for yourself. So let me stop sharing my screen. Wait. And then we can go Benny first. So Benny, pull up your chart, and then I want you to go back to and basically do the same thing. So I want you to show me your liquidity sweep, your market shift, and then your premium and your discount, and then just talk me through what price did in that vicinity or in that area that price is moving. Okay.
Dude. Wait, let me. I'm gonna reset all of this.
Nah, you good.
You want me to just go back? Like, just go back in time?
Nah, pull up an example from today.
I mean, I think this was earlier.
So what I would do is clear off all the drawings on your screen. It'll be a lot easier for your eyes to spot what's going on.
You said today.
If you want to take off those blue bars off of your chart, right click the x-axis. And then click session breaks. Or redo it. And then click session. Actually, go re-click the session breaks off. Right click, and then more settings.
I don't know why I'm on. Okay.
And then scroll down. I don't know why yours is like that. Normally you're supposed to take it off.
What were you saying? Take what? Take these like this?
No, you see all them blue bars? Like that blue bar highlighting all that stuff on your screen?
Oh, yeah, these?
Yeah, like, you know what I'm saying? I would, if you take that off, it'd be easier for you to, let me see if I can do it on mine. Oh, okay. Yeah, I know how to fix it. All right, so go back to your chart. Put this back up. Right click anywhere on the screen, and then go to settings, and then click where it says symbol on the very top, and then you see where it says electronic trading hours background. Click on that. And then drop the opacity to 0 on the very bottom. There you go. And then just hit OK. Boom, there you go. Now you got a quick chart. So basically what you want to do, look at that. Look at that. Look at the price action that you see on screen. And then just do the same 3 things that I talked about. So show me the liquidity. Show me the market shift. And then show me the and show me the premium and discount. So if you need to utilize different time frames, I will go ahead and do that if it makes your life a little bit easier.
Is this a good Wait, what'd you say again? What was the questions, or like how I'm supposed to set this up?
The exact same way you did your
What
homework.
you just said.
That's the same way you did your homework. So it's gonna be liquidity sweep. Then it's gonna be your market shift, and then I want you to highlight the premium and discount of that dealing range. So use it from the price action today.
I see this right here.
I'm doing mine right now, and I'm gonna send it in the chat.
Okay, well actually before you do that, let's help Benny out. So Benny, stop sharing your screen, and then Abel, you do yours. Because if Benny sees the way that you do it, it might help him when we go back to showing him how to do it. See where I can do that? Yeah. All right, so start all over. I want him to be able to see how you marked it up from the very beginning. So just clear everything off, and then talk through it. So explain your thought process as you're marking up your chart.
So this was liquidity, because this is the lowest point. The market shift would it be right here because because once liquidity gets fully swept, it goes past the market shift, and that's how we know it's reversal after that point. And then this would be the range. God damn.
Nah, you good, man.
Hold up.
Hey, were you good?
Baby, does Abel need a hug?
That's some cheese.
All right, bitch.
Ain't no cussing. We young.
Oh shit.
There might be kids watching this.
Hey, it's the very top one. Go above it. Go above
Oh.
it. Yeah, that one. Yeah.
And then I place the Fibonacci tool here because, this is my range basically.
Okay,
And
bet.
this is my range in this price run.
Okay, bet. So I'm gonna critique this just a little bit more. What you're doing isn't all the way incorrect, but I'm a fine tune it in a way that it's easier for you to look at when you're trading. Okay. So one thing you want to keep in mind when you are using your fib and you're highlighting your dealing range, you want to go from the most recent price leg. Okay. So the way that you can identify it is the most recent. How do I describe this? The same way you would identify your market shift is a similar way that you would identify your previous dealing range, okay? So when price begins to reverse, you need to look at the entire leg that caused that downward movement and then that right there is your initial dealing range. So for example, you see where your market shift is? If you were to drag your mouse or follow your mouse left from, keep going all the way up to the top, that right there will be the top of your dealing range. Because a dealing range is literally just the given range that you're working in. So that right there would be the most immediate dealing range that you would be working in at that given moment. Like let's say, you see that big green candle where the diagonal line is going? Yeah, that right there. Let's say you're watching price at that moment. Your next immediate focus would be the next lowest hanging fruit, which would be the top of your dealing range that you have highlighted at this moment. See what I'm saying? So because you're looking at this in hindsight or after the fact, now you're able to look at price going back to where you had it marked up originally as that being the full dealing range. But in actuality, price could have very well went up to the top of that and then reversed back down. So that's why you want to be careful with things like that, and you want to make sure that you're using your most immediate dealing range, because that's how you get some of the most accurate price movement, or I'm sorry, the most accurate price readings. Because unless you're looking to trade long term, then that will be something that you would use. But if you're trying to just be more intraday or more like a scalper, you would utilize the most recent one. Am I making sense? I don't want to over-explain it.
No, it makes sense now.
Okay, so your sell side liquidity is correct. Do me a favor, drop your time frame down to the 1 minute, and then explain to me your market shift. And there's a reason why I'm having you do this, because I want you to see something. And then draw a horizontal line from the peak of that market shift right there.
You want me to explain why this is a market shift?
Yes.
Because liquidity got swept through, and then we have to look for the highest recent high.
Exactly.
And wait for it to get swept through.
Exactly. So you actually marked up the market shift correctly, but one thing I want you to realize, if you go back up to the 5 minute, compare how easy it is for your eye to pick it up on the 1 minute versus the 5. This is why I said sometimes you might have to play around with the time frames, because sometimes it can be easier to spot. Like for example, at least for me personally, looking at that price leg, like I can tell that's a market shift, but for someone who might be starting off, it might be a little bit harder for them to recognize that. So you want to be able to have a clear market shift that they can reference. So sometimes if you feel like you see something on the higher time frame, drop it down to a lower time frame to get a more refined version of what you're looking at. Think of it kind of like megapixels, right? So if I'm looking at a picture and it's kind of blurry, then I gotta adjust the pixels so that I can get a more clear image. You're basically doing the exact same thing. So what you have marked up is correct, but I want you to be able to have ways where you can see it more clearly so that you don't question what you're looking at. So again, drop it back down to the 1 minute and then spot the difference on how easy it is for your eyes to pick up on that immediate short-term high that was used as the market shift. Like, do you see how that little price leg, that all those green candles going up, it makes it a little bit easier for you to understand, okay, this is the breaking point of price?
And it's like more accurate.
Exactly. So the more accurate, excuse me, the more accurate you can have your markups, the easier it's going to be for you to start seeing things to trade with. So yeah, you did a good job, and I'm glad that you're using this today, because I'm glad you're using today's price action. Let me start over. The reason why I got you guys using today's price action is because I want you guys to see how this stuff happens every single day. Okay, so this is literally a real life example that just happened a few hours ago. About 6 hours ago. So it's a good way for you guys to kind of see how this works. So keep in mind, again, the market shift comes from directly after the immediate candle that takes out or violates the liquidity. Make sense?
See.
Okay, so now find me an opposite example. So you just did me one going from selling to buying. Now find me one that's going from buying to selling. Yeah, cook up. You know what I'm saying? Let me know something.
I want Billy, I want money, I want Billy, I want money.
Yes, sir. Let me see something. All right, talk me through it. You gotta act like you with your girl right now. You know what I'm saying? Talk her through it. You gotta make sure
We hear you, Carter.
Yeah, there you
Yo,
go. There
E,
you
can you
go.
hear Carter?
Oh, no.
Hey, co-
What? Say something again, Carter? Yo. Matuki?
Directly after the what?
Oh, here. I can hear you now. Repeat it. Repeat what you just said.
I wanted you to repeat what you said about the market shift. You said it happens directly after the something.
Yeah, so
No.
Abel, this is actually a good time for you to practice it. Explain a market shift to Carter real quick.
So a market shift happens after liquidity gets taken out, and then once it does get taken out, you have to look on the left side of that candle where it gets taken out and look for the either high or recent low or recent high. And then once that gets taken out over here, for example, I'm not saying that this is the market shift yet, but once it gets taken out, then that's confirmation that is a reversal.
So you're looking on the left side of the candle that took the liquidity.
Yeah, like so around this side, somewhere here.
So what was the trick? What was the trick that I gave you to keep out for, so you can understand how to start tracking the market shift? You want to use the first candle that does what?
Excuse me. First candle that.
You just marked it up on your chart. That's all right,
What,
bro.
I marked it up?
Now you good. Take your time, bro.
It-
Hey, call on somebody for your help. Benny, if you gotta tap in, you know what I'm saying? Hit the
Yeah,
boy up.
Benny.
I'll say it's the first candle that breaks that high point that you created that for your buy liquidity. So that green candle wick going up, you go on the leg, that green candle, that whole leg going down, you find your recent low so that you can locate your market shift so that when it does go down, that's the confirmation when it passes that point.
So this right here.
So I'm just gonna reiterate it. I'm kind of clean up the verbiage a little bit. Benny, I get what you're saying. You know what I'm saying? Shout out to Benny. Let's cover it up. Come on, bro. You know what I'm saying? Clap it up. But basically, you want to use the first candle that violates that liquidity pool that you have marked up. So Abel, highlight the candle that broke the barrier you drew with your horizontal line. Okay.
This candle.
So now that you have that, your eyes need to start tracking price immediately left until you find the most recent low. So show me where it would be.
The most recent low wouldn't it be this one?
Okay, let me change my verbiage. The most recent swing low.
Yeah.
Exactly. So mark it out with your horizontal line. Exactly. So I want you guys to notice a pattern, okay? So pay attention to the way price is reacting once these barriers get broken. There's a reason why these swing points are going to be the market shift. So I want you to now keep scrolling to the right, and I want you to see the way price reacted, right? So you see how it consolidated a little bit, and you see how, damn. Like I want you to see like the way price was respecting it. Now again, you remember how I said there is no such thing as a 100 proof trading strategy. I believe this morning it went up. Like zoom out. Okay, now scroll to the left or to the right. Okay, so I want you to see something. Oh, a little too far. So you remember what I said? Remember what I said about the high? So Abel, highlight with your mouse the high of that liquidity sweep. Exactly. So, Benny, I'm gonna kind of give you the same question I gave you last time. Would this be considered a high? Where Abel's mouse is that considered a high resistant or a low resistant liquidity pool?
High resistant.
And explain to me why that would be a high resistance liquidity pool.
Because it's our highest point currently, like in the range.
Okay, so last time when you answered that, how did I clean up your answer? Because you gave me the exact same answer last time, and I cleaned it up to make it easier for you, or to make it more accurate, so you understand why that would be a high resistance liquidity pool for price.
We just don't want price to go up there. So
Now explain to me why though. Like I need you guys to understand the why behind price action, because if you understand the why, you're gonna be more confident in what you see, which means you're gonna be more confident in your entries. So like, give me the logic behind why price should not go back up there, or why we should not see price go back up to that high.
Because we currently see that as the market is going on, that market shift, well, that whole line is getting respected. So
Okay, I'm not gonna lie. That didn't make no sense. You want to explain it in a way that like a new person would kind of understand where you're coming from.
I'm not 100% positive, to be honest.
No, that's good. That's good. Like,
even.
so again, like I said, like it's okay if you guys don't know the answer. That's literally why I'm here, because I want you guys to like pay attention to the way I describe why things are doing what it's doing. Okay, like listen to the logic. So if we're just going off what price did, okay, price swept that previous buy side liquidity. Okay, once price, yes, correct, Abel, where your mouse is. Once price violated that buy side liquidity and then a market shift occurred, right? What is a market shift? What does a market shift signify? Somebody tell me. We've been going over this for like almost a week now.
That's a reversal.
Yes, Sersky. Yes. Hey, clap it up for my boy Abel. You know what I'm saying? I wish I could hear my soundboard, bro. Yeah, there we go. Clap it up for my boy Abel.
Abel, what'd you say?
That's a reversal.
Hey, Bob,
That's a noted fucking sound effect.
Teach my friends how to trade real quick.
It's a change in direction of the market. So it'll be going, instead of it going up, now it's going down. It's a reversal on the change of.
You heard? My bad. My dad called me. You said say what you just said again.
It's a change of direction into the chart. So instead of it going bullish or going up, it would be going down and bearish.
Exactly.
So change of direction.
When you have a market shift, that's literally, it's exactly what it's saying. Excuse me. It is exactly what it sounds like. The market is shifting directions. That's it. Like, don't overthink it. Remember how I told you guys all this terminology is just a fancy way to describe basic stuff. A liquidity pool, an area where price is looking to target. That's it. A market shift. The market is shifting its direction. So if the market is shifting its direction, we got confirmation of it, why do I want to see it violate the direction it just said it wants to go? You see what I'm saying? That's why it becomes a highly defended high now. So at this point, this is typically where your stop loss would be placed, right? So understanding that, I want you to start drawing your eyes right and just follow price. Notice how even though when price went back up a little bit, it did not go past that high. Until it did what? It dropped. And then if you were to even draw a fib, if Abel were to zoom out and draw a fib on that price leg up, he's going to see how price dipped into a discount before going back up. So I'm showing you guys like everything is just repeating itself. I'm not really teaching you guys anything new right now. We're just going over the same things we've been going over for a week. And I'm showing you how this is a real life example of what happened literally today that you could have applied the stuff that I showed you. So I want you guys to kind of like understand my thought process behind this stuff and why you can start becoming very automatic and very consistent with your results. So it's not something that is that's actually overly complicated, but I think when you first start off it seems like that, but the more practice you guys get with these concepts, the easier it's going to be for you guys to comprehend what's actually going on. So it's not bad. Abel, go up to the 15-minute for me. And then reset your chart view. So Benny, let me show you this, right? So you remember how I was talking about utilizing, or actually go down to the 5-minute. It'll be a little bit easier. All right, bet. So Benny, you remember how I talked about a lot of times you can even play around with the time frames to get a more defined view of what you're looking at. So we looked at this at the 1 minute, but then look how Abel stretch your screen up a little bit. Like go to the y-axis and then stretch it up. Yeah, and then recenter the price action. Drag a little bit more to the left, or the other way. I'm sorry.
Other way.
Other way. Yeah, I want him to be able to see all of this. Yeah. Okay, cool. Now show the liquidity sweep on the left, because I want him to be able to see how everything played out. Or like drag the price action to the right a little bit more. Drag your screen to the right. No, like Okay, to the left. Right there. Okay. All right, that's good enough. Okay, so Benny, I want you to be able to see how much easier it is for you to pick up on the concepts that I showed you. So most of the time when you go down to lower time frames, price action is going to seem more noisy at times. You can get a more redefined markup, but that's only after you have used the higher time frame to set your bias. Okay? So look at it kind of like the framework. If I'm building a car, you can't do nothing unless you have the framework of the car already established. Utilizing your higher time frames is establishing that framework. Now, after you have that framework set, that's when I can start putting in like the leather seats, the custom interior. I can get real intricate with like all the little details, right? But it ain't nothing if I don't got nothing to sit it in. It's the exact same thing with day trading, right? So use the higher time frames as the frame of your vehicle, and then when you go down to the lower time frame, you're just going to redefine the concepts that you've already listed. So this is what we call a top-down analysis. Okay, so I would write that down if you guys haven't written that down before. I know I kind of touched on it last time, but I didn't go into detail. A top-down analysis is literally just going from a higher time frame down to a lower one. That's all it is. The purpose of doing that is to get a more accurate reading of price action currently going on, as well as the history of price. If I have, think of it literally just like history, right? So you know how people say history repeats itself, even just like in actual history.
Yeah.
Keep in mind how people, they try to learn from the mistakes of others, right? The way they do that is by having a solid understanding of what happened in the past when certain things occurred. Trading is the exact same thing, right? So by me understanding how price reacted in the past, I have a better understanding on how it's going to react when I see these same signatures. So this is why it's easier to identify them on higher time frames. And if you feel like you're seeing something, but you can't really identify it all the way, that's when you would break it down to a lower time frame, and you're going to see a more redefined version of what you're looking at. Am I making sense?
Yeah.
Okay, cool. So, Abel, yeah, great job, bro. Like, I ain't gonna lie, you actually killed that joint.
Appreciate it. Abel does not need a hug.
Nah, I mean, hey, that boy getting the big cheese. Bro, my favorite one is the one with Bodega cheese.
Bodega, oh yeah, I need my cheese.
Bro, that joint is so tough, bro. I ain't even gonna lie. I mess with that heavy. All right, cool. So now, Abel, take down your screen, and then I want Benny to pull up his screen and do the same thing. Trap money cheese, man. You know what I'm saying? I need that trap money cheese.
I like the Dorian one.
The which one?
You free.
The reversal one was hard.
That's a reversal.
That shit was hard.
Nah, that is hard, bro. This nigga snap with. I ain't gonna lie, Benny snap with the sound effects, bro.
It's a reversal.
You free.
I want Dorian to hear this shit. You want me to do something? I mean, you were still doing today.
Nah, pick a different one. Pick a different one.
I wish I had that mouse. I can't like.
Nah, you good, bro. I know the struggle. Before I got my PC, I was doing that on my laptop, bro.
Frame.
And then if you want to reset it, just right click on your screen and then hit that little refresh button.
That chart view. So, what's it? May 15th. Yeah.
So I want you to be, excuse me. I want you to be able to give me a buy and a sell example because I want you to be able to identify the same thing both ways. Because you're gonna see the same thing I'm asking you to do. It's the exact same. It's the exact same concepts. It's literally just inversed. And again, if you need a, yeah, I was gonna. Or matter of fact, pick a different pair. Go to US 30 today. Yeah. So we're gonna use today's price action from US30.
US.
It's just one S.
I don't know why it's being really slow.
No, you straight.
And then, does it matter which one?
Yeah, go to the first one. And then go to today's price action. And then give me the same thing. So you got an example right there. So yeah, find the example right there on your chart. You don't even got to move price. Go back to how you had it. Yeah.
Oh, like just like this?
Yeah, show me. Just cook up. Tell me what you see, and talk me through it. Like, let me know what's going on. Walk me through your thought process.
Okay, so basically see a low right here.
Okay.
See that price went down through bars. Let me mark it up.
Yeah, I was about to say mark it up as you're talking.
So here we have current low. You see this is sell side liquidity. Chart's going. You see that this red wick right here, a price breaks through this our previous low point, going down.
So I'm gonna
And
stop.
I
Hold
can-
on. I'm gonna stop you real quick. Everything that you're saying is correct. Like, I have no issue with that. Only thing I would say is
Okay.
draw out your lines of liquidity all the way through where price broke it. The reason being is because that's going to train your eyes to see at the point it violated that liquidity pool. So go ahead, continue what you were saying. So you said price liquidated that low, and then what happened?
This liquidated the low, came back up and retraced, and then broke through our market shift, which would be
So follow
Previous high.
follow the tip that I gave you. I said, what candle are you going to use?
okay. So still,
What candle are you going to use for
I
you to
know.
start tracking your market shift?
okay. So it's gonna be previous high. So should I change my time frame or just continue with how it looks right now?
Hey, I'm gonna try to let the chat, you know what I'm saying, help you out. Abel, try to help Benny out with his market shift. Explain to him what he needs to look for him to identify his market shift.
Leg.
Look. Whoa, hold up.
I want to say it's this one right here. I want to say our high would be over here.
Okay, so Benny, tell me what was the
Early
trick?
high.
What was the trick that I gave you to find the market shift? All right, so this is what we're gonna do. Do you have your
Is there a little down lower?
wait?
Continue
Hold
my time
on.
frame.
Hey, Benny, you got your notepad next to you?
Yeah, I do.
All right, bet. So before you touch anything else on your computer, grab that pen and paper for me. And then
All right, I
I
got
need
it.
you to write. Here, let me share my screen so you know what to write, because I want to make sure it's worded correctly. Take your screen down real quick, and I'm gonna make sure everybody else has this too. So this is a good learning point. This is why I have you guys do these exercises, because I want you guys to be able to build these reps. You know what I'm saying? You guys are doing a great job, so I don't want you to feel like you guys aren't. Let me pull this back up. I just want to keep redefining things as much as I can so that you guys are as accurate as possible. I would be doing you guys a disservice if I let you guys just say the wrong thing. You guys can see my screen?
Yeah.
All right, cool. Where's it at? Text. Okay. So circle it, whatever you gotta do. Tips on how to spot correct. MS is just gonna stand for market shift. So step number 1, you wanna identify liquidity. 2. So then you're gonna start on candle on the, let's do like this, on the first candle that violated months of liquidity. I'll just put area. Right. How do I want to word this? So you track price until you find the most recent short term high or low. Okay, so I need you to get out your pen and paper and write this down. And then after you write it down, let me know. Y'all boys snapping though, man. You know what I'm saying? I'm gonna clap it up for y'all boys, man. Oh, wrong button. This one. Clap it up for the homies, man. Y'all making a lot of progress really soon. I hope y'all know that. Like, a lot of the stuff that you guys are re-describing back to me, it took me like months to get to that point, and you guys are doing that within a week. So I want you guys to really give yourselves a pat on the back. It's still only the beginning, but I want to make sure that you guys understand you're moving in the right direction very quickly, which is a good sign, obviously. So, you know what I'm saying? You guys have any form of doubts, just understand you are definitely ahead of the norm, by far. You got this written down, Benny?
Yeah, I wrote it down, but I'm dumb. I didn't even really peep. I wasn't looking at this shit, bro.
Nah,
It's supposed to be this.
Bro, you good? Hold
supposed
up,
to
let me stop sharing my screen because I want you to share yours. All right, bet.
So when we look at this candle, the most popped out swing point high would be this.
So you're moving in the right direction, but you had it the first time. Where your mouse is right now? Because keep in mind, I said the short term. So do you remember how I told you to find your? How did I tell you to find your dealing range?
Dealing range would be our nearest short term high and low.
So I get what you're saying, but let's upgrade your lingo a little bit. So your dealing range is going to be your most recent external, or how do I
External.
name this? Because I want to say it in a way where like you won't mistake it. So you're gonna look for a price run where price is continuously moving in one direction, right? So you're gonna find your two most recent swing points. So for example, when price, that big red candle, you're gonna find the peak at that point where price started initially going down. Okay. So for example, you see where your blue line is on the very top? That would be your dealing range from the top of that blue line all the way down to the low of that green candle where it wicked. Correct. So mark it up because I want you to visually see it. No, use your Fibonacci tool.
Oh, Fibonacci? Okay.
Yeah. Because it's going to highlight everything for you. So delete those blue lines. And then use your Fib tool and go from the high and the low. So, and then right click. And then take off the extend right. Because I don't want it to confuse you too much. So yeah, just go to settings. Or click on the Fib tool. Click on the Fib. Like, click on the one that you have on your screen. Yeah, click on that. So, yeah, delete that. The one you just made. Yeah, delete that. And then click on the one on your screen. Hit the setting button right next to where it says 2px. Yeah, to the right. Yep. And then click where it says style. And then you're going to uncheck the box that says extend right. Extend lines right. Uncheck that. There you go. And then hit OK. Now it's highlighting specifically what I'm talking about. So everything that is highlighted right now, that is your initial dealing range, okay? That is your most That is your most immediate dealing range that you'll be working with at the time. Now, the reason why is because that is your most recent swing points of the market, right? So price started moving down. You want to go to the very peak of that move where price started moving down, and that's how you know that's your beginning. And then obviously the end where price reversed. So understanding that, this is the area that you're gonna want to be focusing on, because as prices moving up through like those Greek candles from down below, these are the reference points that you're gonna be referring to. Okay. So just on the time frame that you want to find the most immediate short-term high within the area that is highlighted right now. So where would that be?
Okay. It would be located right here.
Exactly. You know what I'm saying? Now we doing something.
Oh yeah, I need my cheese.
Yes, Sirski. Yes, Sirski. That's what I like to see. So yeah, exactly. That's how you're doing it. So if you were to drag, and remember what I said, you want to practice. You want to get in the habit of dragging these lines out where price violated it. So again, I want you to like actually sit there and comprehend the way price moved after it violated that short-term high, right? So these are characteristics that you can embed in your brain for you to understand with a high probability how price is going to move. So now that you have a buy side reversal example, show me another example, but in the reverse, right? So we just went from selling to buying. Show me one that's going from buying to selling, but go from today. And if you got to change your time frame, then do that. So actually, here I'm gonna give you a little bit more instruction. Break your chart down to a 15-minute. And then right there, just show me right, like there's literally an example. There's two examples right there on your screen right now.
Okay.
So walk me through it.
Okay,
Like,
sure.
you use your words as you're marking it up so people can understand what's going on.
All right, so we have our so we have I'm gonna use this one right here. So we have our highs set for right now, which would be over here. I'll mark it up. Have these highs. Well, I'm gonna do this.
There you go. Yeah, get into a habit of drawing a line through where price violated it, and then talk me through what happened.
All right, so we have our highs over here.
Uh-huh.
Price goes up. Price violates it with this green candle.
So practice using the right lingo, right? So price did what? What is it called when price violates?
So we have our price violates our buy side liquidity. So our high, and this is our swing point. Ends up going back down in a reversal form, so that we see it start to reverse.
Okay.
And then marking up our market shift, it would be located at this recent low right here.
Yes, sir. Yes, sir. Hold on. I gotta start spamming these emos now. You know what I'm saying?
Yeah.
Yes, sir. Yes, sir. My boy got it right. Yes, sir. See, okay, so I'm glad you're starting to get the hang of it. If you can identify these 2 points right here in the market, you can be profitable just off of this. I ain't even gonna lie to you. Because as long as your bias is correct, I can help you fine tune your entry. Like, I just need you to know where price is going to go and why it's going in that direction. If you're able to understand why price is doing what it's doing, like, you're set, bro. I ain't even gonna lie to you. Like, at that point, it's just about patience and discipline. So yeah, that's a dub, man. That's a dub. I know we got some other people in here who weren't in here last time. Do y'all want to give this a shot? You don't have to if you don't want to, but I always like to give people the opportunity to practice, because that's what really takes your learning to the next level, instead of just watching me do it or listening to me speak.
I want to do it, but if anyone wants to go first, because I got to get my computer out. Go ahead.
All right, yeah. So does anybody else want to try it?
I ain't gonna lie, I'm in the bathroom.
That's that boy nigga cheese.
Hey.
I was about to take a shower. I saw you on stream. I was like, hold up, let me tap in.
Nasty boy. Okay. Man.
Yeah, that's the one.
You free?
Nah, it's all good, gangy. It's all good. All right, bet. I was gonna say we can just get Carter to do his, and Carter, I'm gonna have you do SPX. So I'm gonna show you how to pull it up on your chart. We should get it up.
All right, give me a second. My computer's just turned on.
All right, bet. You on your phone right now?
Yeah, I'm on my phone.
I was gonna say if you want, you can pull it up on your phone. You can go to tradingview.com. It's the same thing.
But like, isn't it? Can I do the markups and shit too?
Yeah, but actually, just get into a practice of doing it on the computer. You have a better field of view doing it on the computer. If I'm being honest, so
I thought too. All right, it's up. Let me go to TradingView. Or let me go to Discord first.
all right, bet.
All right, I'll join back in a second. I'm about to hop out.
All right. Yeah, so you guys are picking up on it pretty quick. So, I think I'm probably just gonna give you guys the same homework assignment. I want you guys to get reps of picking out the correct liquidity and the correct market shift. Because if you're able to do that, you're training your brain to start moving in the right direction, and that's when you start getting deadly. So, props to y'all for real, man. Props to y'all, man.
Yes, sir, Ski.
And then yeah, when you get your screen shared, let me know so I can pull it up.
You don't hear me?
Yeah, we can hear you. All right. So click anywhere on your screen, and then type in SPX. Yeah, and just click on the first one. That's good enough. And then go down to the 1 hour.
Where are all these fucking gaps?
Click on your screen. Click on your screen somewhere. And
Yep.
then type in
Click
SPX
on-
again. I'm gonna have you pick a different broker.
SPX.
Yeah. Type in 500 afterwards. All right, go to the first one. All right, there you go. So reset your chart view. Okay, and then go down to. Actually, this is no. We're gonna use something better. Go down to the 5 minute. Go down to the 5 minute. Okay. So highlight the same thing. So if you want to take off those bars on the bottom, then what you want to do is click where it says, you see where it says volume and ticks on the top left underneath the sell button? Yeah, hover over that. Hover, and then hit the trash can. Yup.
Cool. Gotcha.
And then talk me through your markup.
All right, so first thing I'm thinking about is this is liquidity right here, right? And it's taken right here.
Okay.
That'd be my how to do text. Oh. LS. Liquidity sweep. And then at that point, I guess I'm trying to the market shift next. So I guess I look from the left of this point in here, right? So
only thing I would say about this, that price run that you're highlighting your liquidity sweep through, that's gonna be something else that we're gonna talk about later. So you want to look for a point where price violated a previous high, and then it took out the short term low. So you're in the right vicinity where you started, but start moving your eyes a little bit more to the left, and you're gonna see the same patterns. So delete that line, that blue line, and then I want you to look at. So the place where you started, drawing out your. No, you literally just had it on the right way. Yeah.
Here.
Mhm. So what are those? What are those called? Oh, you weren't here. My bad. No, you weren't here last time. So the way that you're able to spot liquidity, not only is it the short-term high or short-term low, or I'm sorry, I said that wrong. Not only is it the previous high or previous low, it can also be equal highs or equal lows. So if they look relatively equal, that's going to be a place where liquidity is going to be targeted. So you're in the right vicinity, but I want you to have a clear understanding of why I'm telling you to highlight both of those peaks. Because both of those peaks is representing relatively... Exactly. So if you were to draw your line, directly to the right, you're going to see how price on that... Keep going. All right, stop right there. So you're going to see how on that last leg up, price shot up through those relatively equal highs, and then what did it do? It reversed, right?
Yeah.
So now that we found that, you need to find the market shift. So you need to find the area that's going to confirm that price is going to change directions. So we're going to find a candle that immediately violated the high, right? and then we're gonna start backtracking to the left and find the most immediate short-term low. Exactly.
Right here, right?
Mm-hmm. And then you would mark that
Okay.
up.
So slow down for a second. The liquidity is this candle right here and this one. These two highs, or is it this one and this one up here?
Yeah, the
They're
second
saying
one.
the
So that one and the other one. So remember, it's relatively equal. So it doesn't have to be equal exactly. It can be relative, right?
So these two, like,
Yeah,
I guess.
exactly. So honestly, if you want, you could just draw it from the second peak going out forward.
Gotcha.
So like, yeah, just drag that all the way to the right. So yeah, delete that blue one and just use the red one on top because it's already on there. And then grab the left side of that and then just drag it. Yep, there you go. So drag it out a little bit further because I want it to be obvious for your eyes.
Gotcha.
Yeah, drag it out a little bit. Click somewhere off the screen and then re-click it. Yeah. All right, boom, that's good.
All right. So these two relative highs are liquidity, and it gets swept right here by this green candle.
Uh-huh.
And then I still don't understand the whole daily range thing. So going off the rule, you said find the candle that sweeps that violates price, and then going left from there and find the lowest or the highest swing point. The most relative would be this one right here, right?
Yeah, so what would that be?
This is the market shift.
Correct.
Or shit, if I can. God damn it. What the fuck is going on? Why is it not?
I get what you're trying to say though. If it don't mark
Yeah,
it
yeah.
up.
This right here to there, that's our market shift, right?
Yeah.
Yeah, that's and
So yeah, that's correct. Now find me
It's just-
so find me an inverse example now.
inverse, okay.
So there's one all the way there to the very right of your screen. Now I won't give you the answer, but talk me through it once you
Okay.
see it.
This right here is liquidity.
Okay.
And it's being swept by this red candle.
Okay.
And going directly left. I'm guessing that this point right here, or
So do you remember?
That green-
Were you here? Were you here when I explained that type of market shift table and how to refine it? If you feel like you see something, then you should do what?
go to a higher time frame or lower time frame because it's more detailed, right?
Exactly. So now you would go down to the 1 minute, and then look at the same area that you just referenced, and then give me an answer from there.
Okay.
Yeah, you might have to refresh your screen.
Yeah, something might be fucked up. No, I'm black.
I'm black.
And then
This is not the
just
right
right click and hit reset chart view. And then type in SPX again. So click anywhere on your screen, SPX 500, and then the third one. That's the same broker.
So?
Yeah. And then go back down to the 5 minute. I think that's where you were at. And then highlight the market shit or highlight the liquidity so that you can find it when you drop down to the 1 minute.
Right here. Okay. It removed my other lines. Okay. So right here is liquidity sweep or liquidity point, and this is sweep.
Mm-hmm. So drag it all the way through the candles so you can clearly see it.
Yeah.
And then drop back down to a lower time frame and find me the market shift. So scroll to the right. Yep.
All right. So going through, starting at the point of the candle that took liquidity that did the sweep,
Uh-huh.
moving left. And
So you-
since we're going to buy side, it has to be a buy side point, right? So
So you're gonna
go
find the
from
most recent swing. I'm sorry, the most
High.
recent short-term high.
short-term high. So this one right here, this green candle right here.
Exactly. So what would that be?
Okay. This is the market shift.
Exactly. Yeah, that's it.
It's a real good example. You did a good job.
Facts, bro.
You get some of this too.
Bodega, bodega, yeah, me machine.
You get this.
Bodega, bodega, yeah, me machine.
And then what? This is the fair value gap right here, right? Or some shit. Or that's the wrong fucking tool.
I get what you're saying. We're gonna lead into that next time, but
Okay, gotcha.
Your brain is moving in the right direction. I'm gonna show you how to refine that though. So
Okay. I appreciate
right now, I want you guys to kind of just keep focusing on what I just showed y'all, because if you guys are able to go back on your charts and then find these sweeps with the market shifts, it's gonna greatly increase your understanding. So I want you guys to kind of peep something too, okay? So Carter, you see where like your mouse is, right? Right there. Go down to where price swept the liquidity. Yeah.
Down
so
here, yeah.
Mm-hmm. So, no, actually a little bit further to the right. Where it started. Yeah, that little area right there. So I want you guys to see why it's important to wait for the market shift, right? So notice how you see that if Carter's using his mouse and then he's following price directly to the right, you see that little green candle with the wick that's shooting through his red line? Right there. Yeah, go back to the left, 2 candles. Yeah,
over here.
Yeah, you see how price shot up through there? So there's a reason why we wait for that short-term high on the opposite side to get hit, because I want you to see the way price reacted once that market shift really occurred. Now, if you jump the gun, notice how price was doing that consolidating and went right back down through it, and then it shot back up, right? These are ways that you can kind of avoid a headache. You know what I'm saying? It's like picking a good girl. You know what I'm saying? Like, imagine you pick a girl, she just give you all these problems, man, but you jump the gun because she had a big old booty. You know what I'm saying? But see, if you just wait and you patient and you let her tell on herself, now you get to see, oh, okay, you know what I'm saying? Now we moving in the right direction. It's the same thing. So that's why I'm like, you want to have these clear, defined areas that you hold yourself to, and this is where discipline comes into play. So I was saying to them earlier, none of this stuff really works unless you utilize. Bro, what's up with your screen, bro? Why is it twerking like that?
Yeah.
Mine speaking?
Yeah.
Yeah, your joint.
I don't know.
Yeah, your joint keep flashing, dude. All right.
Oh, I have no idea.
Nah, you good, bro. But basically, hey man, what type of websites you been on, bro? It's crashing your internet. Let me find out, nigga. But nah, basically, what I was trying to tell you was, this is why you want to have patience and discipline, okay? Because if you're patient and you wait for your markup, 9 times out of 10 you're gonna get what you want. But when you're rushing the process, or when you're jumping the gun, or if you're not waiting for the move that you know that works, then your account gets chopped cheese every single time. So again, that's why I said I can show y'all the path, but it don't mean nothing if y'all don't utilize patience and discipline. Like I said last time, those are the 2 things that's going to bring you longevity in this, because anybody can hit a lick, you know what I'm saying? But to do it over and over and over again, it's going to take a certain level of patience and discipline. But again, that comes from knowing what to look for, and when you are able to find these concepts on your own, it's going to build the confidence in you to not have FOMO, right? So FOMO is just the fear of missing out. That's basically like, oh, I'm going to miss this move, I got to get it now. Like, nah, bro, you know what I'm saying? Like, my nigga, you know, like that Lil Yachty meme, he's like, my nigga, chill, you know what I'm saying? Because this stuff is literally repeating every single day. So I gave y'all some past examples and even a current example that happened this morning, and even in the evening session that you guys can refer to. So I want this to give you guys confidence that just because price is moving erratic or fast, that does not mean you have to jump on it right away. Wait for your move. Wait for your setup, because that's going to give you the highest probability of being successful in this, okay?
Perfectly said.
Thank you, Teach.
You said what, bro?
Said thank you, Teach.
Oh, no, fast. You know I got the broskies, and you know what I'm saying? So, all right, bet. We're gonna call it a day right there. We're probably going to do the next one. What's today? We can do another one tomorrow. What's tomorrow? Thursday? Why I feel like I got something to do tomorrow.
Yeah.
I need to buy that calendar. I don't know why I keep stalling, because I feel like I tell people I'm gonna do stuff, then I forget because I get swarmed up in my schedule. But yeah, I say we do it tomorrow. So we can do it tomorrow at the same time, 8:15, and then I'm gonna get some stuff lined up for y'all. We're gonna go over fair value gaps and order blocks. So now that you guys are understanding the framework of your vehicle, we're about to start building the interior. You know what I'm saying? So I'm gonna start showing you guys how to find your actual entry point. You know what I'm saying? So now you understand bias. That's half the battle. Now it's at the point of understanding, okay, now I understand where it's going. How do I understand when to get in?